Hello, everybody. Welcome to the second day of the four-day live session webinar. My name is Mark Shawson. We'll be starting in just a moment, but in the meantime, please put your name and where you're from in the question box. Now, typically, I like to give a shout out, but I expect that we'll have many hundreds of people in this forum. So I just want to say collectively, thank you for showing up, and hopefully we'll get some value out of it. So we've got everybody from Canada, England. Peter says it's freezing cold in Austin, Texas. I know you guys have been like 1 degree and massive snow, and I can see you've at least got power. So at least you got that going. So I expect a lot of people on here, so I'm just going to give several minutes to allow everybody to get checked in. So if you want to get a cup of coffee or whatever you want to do, just take it easy. Hi, Depeche, how are you? I wish this webinar platform allowed everybody to see each other's comments, but unfortunately, that's the one deficiency. I don't understand how you build a platform like this and you don't allow people to communicate with each other. Depeche, thank you. Trying. So John, if people, John's saying he's got sound problems on Google Chrome. Sometimes Google Chrome does not interface well with this platform. So try another browser if you cannot see or hear the presentation. Graham says GoToMeeting was developed in 2004. Enough said. You're right. We've tried others. We did a trial of some other platform last week, and every platform has its own advantages and disadvantages. And I think we're going to be trying out Zoom, for future things. So hopefully we can make that a little bit better. It's a real shortcoming that you guys can't see each other's comments. Okay, good, John. So Elton says the audio setting is hidden behind the Chrome browser. Use YouTube Live. Yeah, I should have said that. So I'll give this another 2 minutes, and then we'll get started. But thank you all for showing up. Hopefully you guys got something out of. Tian, I don't know. I don't know what we have available or not, to tell you the truth. So Peter says yesterday was great. Thank you. Yeah, we'll talk a little bit about, yesterday, maybe some things going forward. I think I gave you half a dozen stocks yesterday. And, as I always say, it's not a stock market, it's a market of stocks. And, some I like, that I see going higher, and some I like that I see going lower. And gravity works because, when stocks go down or when anything goes down, they go down a lot faster. So I love shorting stocks. I know that I actually got myself caught up in that whole GameStop thing. I was short beyond meat, and I stayed short, and I'm glad I did. I'll talk about that in a moment. I talked about Snowflake yesterday, SNOW. I talked about Lemonade, LMND. I shorted both of those today, had a field day. I bought into the sell-off in Lyft. I'll talk about that. So we'll talk about some of these things. Really what I'm trying to do in these sessions is, give you an idea of my price action, price pattern trading methodology, and then also kind of give you an insight into my process. So, it's kind of one thing to see patterns in a textbook or on a website, but it's another when you kind of, got the live market moving and, all kinds of things happening and all kinds of thoughts and doubts streaming into your brain. And I kind of want to just give you an example of, how I kind of look at things, how I handle things, and, hopefully it'll be of some value to you guys. All right, I'll give this another 30 seconds and then we can get started. So welcome to the second day of the 4-day live trade execution training sessions. My name is Mark Chazen. If you haven't already done so, please put your name in the question box and I'll get started. Sven says, pattern recognition. How do you see the difference between a double top, double bottom, head and shoulders? So I'll talk about it. And then sometimes the market throws all kinds of patterns. So we've got a lot of people still checking in. So welcome everybody. So Graham, I'll talk about my insurance day bars. People are asking about trading platforms. I don't know where you are in the world. Probably Interactive Brokers, is probably the best broker that facilitates, all kinds of instruments, and it probably can be accessed from wherever you are all over the world. So Interactive Brokers. If you missed yesterday's section, just message our support team. They can send you a recording. Let me just put that in the chat box here. And if you join up and you have any problems accessing anything, this is the email to use: support@thepatterntrader.com. They'll usually get back to you within 24 hours. Mustafa, good to see you too. I know we had a back and forth a couple of weeks about gold, and I was looking a little dodgy, but you can kind of see what my thinking was, and now gold is crashing. So Michael says, how long have you been trading? Well, it's like asking a woman her age. By now, I'm so embarrassed, but I've been trading, I don't know, 4 decades. So I've been staring at these screens for a long time. So hopefully I can help you guys avoid a lot of the mistakes that I made. That's why I started the Pattern Trader. Carlos says, do insurance day bars work for weekly and monthly charts? They sure do. All right, so why don't we kick things off? So once again, welcome to the second day of the 4-day live event. My name is Mark Chazen, the Pattern Trader. Again, I gave a little bit of my background yesterday. I've been trading in the markets for 4 decades. I started my career working at all of the brokerage firms, the major brokerage firms. I was a vice president for Merrill Lynch, vice president for Drexel Burnham, which was Michael Milken's firm, vice president of Oppenheimer. Worked for Bridgewater Associates, which is a $175 billion hedge fund. I traded my own account. I traded institutional accounts. I traded high net worth accounts. And since about 2000, I've been a private trader, just trading my own account. And then my partner, Peter, my marketing partner, said, in like 2015 that, you got to start something because there's so much, guff and nonsense out there. And I really, didn't want to do it because to my mind, to be a trader, you really have to be able to swim against the stream. So I don't know if you've ever seen those commodity pits in Chicago where, there's 500 people packed in there and screaming. And, as a trader, you've got to be able to wait in those pits. And when everyone's yelling buy, you've got to have the conviction if you think it's a sell. And so it's really a loner's game where, actually, to my mind, the more input you have, I think the worse it is. So I know a lot of you probably go on forums and hang out in different places, and you've got CNBC or the BBC playing in the background, and you've got all these analysts and talking heads telling you their opinions all day. And to me, that's just, I don't know, it doesn't work for me. I think you have to be completely objective. I've been touting the stock of Lyft, and today, Lyft really came off. So if you weren't here yesterday, I'm just going to go through, my presentation really quickly and just show you that, over the last couple of weeks, I've been recommending, buys in the pound versus New Zealand dollar. And you can see here some of my positions. Got a few pound New Zealands in there that are, profitable, about 80 grand's worth. I'm also short gold and long the pound versus the yen, as you can see. I'm probably going to bail out of the pound yen, and I'm going to check out the pound New Zealand at the end. But we'll talk about all of that. And then over the last couple of weeks, I've been alerting our members, and this is what my emails look like. If you're an elite member, what I try and do is demonstrate what I'm looking at on the chart. The setup, the double bottom, what I call my insurance day bar, the key reversal, and then layer it with an execution strategy that requires the market to confirm what I'm looking at. And so this is what my outgoing emails look like every day. And so a few weeks ago, I started recommending the stock KTOS at 30. It just closed at about 33.30, so about 10% higher than this. Just about 2 weeks later, I recommended adding to the trade at 33. I've also been very high on Lyft, the company LYFT, because of a huge double bottom price pattern. Started recommending it 2 weeks ago, 3 weeks ago, under $46. I've been buying the stock and the options very heavily. This is kind of what my positions look like, some of them. I mean, this is an extract from one of my accounts that mainly has options. I've been playing around, and then my other accounts have, my stocks. So you can see I've been long these KTOS March 32.5 call options for several weeks now. So, most people get in and out, and, I'm up about 300%. I bought these around $1.10, $1.20, and they're trading at about $2.95. But the great thing is I've got till March 19th, so over a month to hang out in these things, and the stock is making new highs. So I'm making 47 grand in this thing, and we'll see where it goes. But the thing with options, you think you own something, but you really don't. This all can just disappear on me overnight. So I've got, almost 100 grand in these options, and, they could all go bye-bye tomorrow. So, but you have to have the conviction of what you're doing. So in this case, I'm short, or I have what I call puts, which is a bet on the short side, the 175 puts. I started buying this thing when the stock was around 173, closed around 167. And I bought these things for 250, and they're currently trading at 850. So I'm making about 300% right now in those puts. And then this morning, I thought it was a gift. Lyft was, down about $2.50. And to me, it's like when, life gives you lemons, you got to make lemonade. And to me, that was just a gift. When the market was literally, it says 258 here, the market was down about 258 this morning. And I bought these calls on the absolute low. They were trading for about $1, and now they're 258. So I kind of doubled my money in a day. And then these I've been hanging with for a few days, and they're the 57 calls, and the stock went lower today, but it closed on the high of the day. So I still got 2 days for these things to maybe do something. And based on the way Lyft closed, I'm hoping that we'll see something very quickly. So I'll just kind of flip over here and show you kind of what happened today. So this is the stock of KTOS. Which, well, maybe let me back up. If you weren't here yesterday, I'm just going to flip to kind of a weekly chart and show you what I've been looking at long term here. So I always look for some kind of gestalt. You know, to my mind, um, the market moves in the direction based on the underlying, you know, pattern, preceding pattern. There's always some kind of pattern underneath something, unless you're in a long-term trend like the NASDAQ, in which case, you know, I just use my tools to get, you know, involved in what, but ultimately you have to know where to face, which way to be faced in any instrument you're trading. So to my mind, I always look at the underlying pattern, and that pattern could be, you know, 3 years ago. But it tells me which way is the major, you know, trajectory and which way I should be facing. And so to my mind, you know, this stock started flashing, you know, a really huge. So here was this funky looking double bottom, which looks just like a W bottom or a double bottom. And with the word bottom in it, it implies that this is just going to go higher. Now, in addition to the double bottom, we also have this inverted head and shoulders, which looks like an upside down head and shoulders price pattern, a man or woman's head and shoulders. And then basically this thing broke out around the $20 area several weeks ago. So to my mind, you know, now you need to be looking in the direction as indicated by the pattern, right? So this is a bullish price pattern. A double bottom inverted head and shoulders is a bull price pattern. So this means that by and large, you know, the stock is going to go up, you know, but nothing goes straight up. So when the stock went from 30 down to 26 about a week or so ago, I looked at that as a huge opportunity. Instead of looking at it as a sell-off and panicking, I looked at it as a huge opportunity, and I started looking at the call options because that's, you know, a very levered way of, you know, putting on a bet. And I started looking at these 32.5 strike price, you know, when the price was around $27 or $28. So I was buying the 32.5 call options, which meant that in order to make money, the market would have to go above that strike price. Now I paid about $1.10 to $1.20 for my calls. This means that my break even is about 33.60, and right now the market closed at about 33.30. So you know, I have about 90 cents of intrinsic value, and I paid $1.10. But right now the calls are trading near $3 because I'm in the money now. You can see that the stock closed above my strike price. So now you're in the money. So now, you know, each dollar this goes up, it'll go dollar to dollar, dollar for dollar with what my options are. So for every dollar I paid, I'm going to make $1 for every dollar that it goes up. I'll make 100% on my money every dollar this thing goes higher. Now, it may not go any higher, but for every dollar that it does, I'll make 100% on my money. And but you know, call options can also disappear. Just, you know, the stock just has to be down $2 and all the premiums will go bye-bye. So it's a very risky game if you don't know what you're doing or what your objectives are. So you're just better off buying the stock, because this thing I think you can hang out in and be very secure in for quite some time. So I'm just kind of blow this up so we can see a little bit better. Hopefully, you know, I know it's a pretty light. I don't know if it shows up well on the screen, but the recent action kind of traced out this reverse symmetrical triangle. So you've got this reverse triangle going on here, which is, you know, kind of nothing. It's just a neutral. I try and look at shapes and patterns, you know, all the time, and then try and decide what the price is going to do within those shapes and patterns. And so this is what I call an insurance day bar. So somebody asked me that earlier. So it's kind of, when I say insurance day bar, that's kind of my own personal slang, because, you know, the way I define an insurance day bar is either in the form of a key reversal, where the market, you know, goes lower and then closes on the high of the day, which indicates that, you know, seller, you know, the market try to push it, you know, lower, and by the end the buyers were in control. And it also tells me, you know, where my risk is, because you can see anybody who tried to push it down here was unsuccessful. So all these people who try to push it, you know, did all my work for me. They showed me where the risk was. Another form of an insurance day bar is what I call an inside bar. And I'm not really looking so much as where this inside bar closes as much as what it represents. To me, it represents a storing of energy where, the market is just, it's at a certain level and it's just hanging out and it's just building more and more energy at that level. Now you'll see, we'll go to lift in a minute and you'll see that there's 4 inside day bars in a row. So at some point when it breaks out, it's going to break out with huge velocity because you've had all of this compression. And so this is what I call the, and it can be, the same on the other side, where you could have a key reversal this way, like I saw in Beyond Meat yesterday, where you had a huge key reversal. I shorted based on that and, making a ton of money right now. And then of course you can also have, a combination. And if you get a combination, it's a beautiful thing. And then I just layer it with my execution strategy where I put a sell stop right underneath those prices and require the market to confirm it. And if the market goes up, I don't get put in. And if the market goes in, the likelihood is I'm going to be put into a good trade. So I don't look at these, what I call insurance day bars, in a vacuum. I kind of, obviously look at it, what is the preceding trend? What is the underlying pattern, behind this thing? And so to my mind, like I said, the driving pattern is that double bottom, inverted head and shoulders. And now you see this huge key reversal where they try to push the stock lower, got it to, I don't know, 31.5 today. And by the end of the day, close on the very high of the day, in an uptrend, so I can well imagine that we're going to see some nice follow through. So, if you don't own the stock, you can put a buy stop above today's close somewhere up here. And to my mind, you'll probably be in a good trade. And again, full disclosure, I am long the stock and option of KTOS. I'm an educator. I'm not a money manager, so I'm not making recommendations. So, again, a little bit of a nuance here. The market will always throw you shapes. And right here was a very legitimate double top. So if you're trading this thing and now you see this, it does look like, that's why I like the benefit of more and more time. So when I look at this thing on a longer time frame, and see on the weekly chart this, huge double bottom and inverted head and shoulders price pattern, I know that this is just a fake out. And so, it's kind of a lot of experience and understanding the market, but, you could have taken this for what I call a counter trend, trade and made a few bucks off of it. But to me, this represented an opportunity. So when I saw this key reversal right here, that, was money for me. That started tipping me off that this was going to go back in the direction that I was looking, where it made a new low, close on the high. You can see did that right in this support area. So I use a combination of patterns and what I call price action, these key reversals, to get me in, the direction. So, why I call this an insurance day bar is because this bar tells me where to get in and catch the momentum and where my risk is. So this to me is my risk, and who knows what, the reward is. I think substantially higher than here, based on these underlying patterns. So Sean says, could you explain more where the buy stop and the stop loss? So again, once I understand the direction and the pattern, then I look for, what I call my insurance day bar, and then I just, set up my trade. So I'll put, the buy stop here at, 33.40. I'll put my, my stop loss here at 31.50, and this will be my risk. And then I always kind of put some kind of arbitrary take profit, like, 45, so I'll put my, my take profit up here. And guess what? If this thing starts marching up here, I'm going to just, keep moving my take profit. I'm not going to, stop this thing from making me money. And I'll move my stop loss in sync, but not so much that, I kind of squelch the opportunity here, because you can see the markets do come off. Went from 34 down to 31. So if I had my stop loss too close, I'm out of a good trade. So, I always keep my stop loss, and so it's an art, not a science, where to put these things. I just try and place, the stop loss out of the way of the major noise, and then, put an arbitrary take profit, and then, see where, what the market looks like. If it starts, looking different and now it's doing that, I'm gonna, start modifying my parameters. Shabusu's KTOS is silver. It's called Kratos Security and Defense, something like that. It's not silver. It's a company called Kratos Defense and Security Solutions Incorporated. So let me quickly look at Lyft, and I bought right into. So again, I talked to you about, I look at very long time frames, weekly charts and daily charts, because to me, when I see this double bottom right here, this tells me everything I need to know. I don't need to see a Bollinger Band. I don't need to know volume. I don't need to know, anything. They say a picture's worth 1,000 words. And to me, that picture just tells me you've got a giant bottom, and the only way for this thing is up, up, and away. So you've got a bit of an inside bar going on this week, and we've got 2 days to go. Maybe it'll get outside, but if this stays as an inside, this is like kind of the coil that I'm talking about. And simply next week, I would just put a buy stop above this high, if this were the weekly bar. So these, inside bars work as much for a weekly chart, a monthly chart, a daily chart. You can see here's a little inside bar, and you put a sell stop. Sometimes those bars are reversals, and you can see this giant reversal that came out of there. So I use a combination of price action and price patterns to get me in the direction of a trend. And so the beautiful thing is you have very low risk with these inside bars, because you put your buy stop there, and then you put your stop loss right under there, and this represents your risk, and that represents your reward. So to me, I look at trades where I can see a 3-to-1 risk reward. So if I'm gonna, put a $2 stop loss, then I want to see a $6 upside. And if you can do that, religiously on your trades and be disciplined to do that, you'll never lose. Because if you have a 3-to-1 risk reward, so just to put that in perspective, let's say your risk is 250 and your upside is 750. If that is a 3-to-1 relationship. And if you set up your trades like this, you can lose 72% of your trades. So win-loss means nothing. If I tell you I won 44% of my trades, you'll think that I'm a shit trader. But I think like all of 2019, I didn't win more than 50% of my trades in a given month. And I made a fortune. It's how much you make on the winning trades. So I just gut losing trades. I just dispense with them really quickly, and then let the winning trades run. And the profits from the winning trades overwhelm the profits, the losses from the losing trade. So this is, again, an idea how to set up a trade where you put your buy stop there, your sell stop there, put your take profit somewhere up here, and see how the market does. And then I would keep moving it, unless there's some pattern shaping that there's going to be some kind of reversal. Probably the next resistance, this will be in the high 70s. So that's still $15 away or something. So I bought Lyft, right into the sell-off today. So look, this is the problem if you're trading a short-term chart. At some point, this thing looked really ugly. So you can see that if you're trading on a day chart, this is what you're seeing. You've got this kind of double top up here, this inverted cup and handle formation. You got this huge gap, and it's looking ugly. I bought right here. I just blindly. There was no bottom, there was no nothing, there was no reason other than I think that this thing is in such a bull wave that I just use this sell-off as an opportunity. I said yesterday, the greatest thing I heard greatest quote was when they interviewed Wayne Gretzky, and the guy said, "Look, Wayne, you're not the strongest guy out there. You're not the fastest guy out there. How, do you do what you do?" And he says, "Look, I don't skate to where the puck is. I skate to where it's going to be." And so when this was down here, my vision is this is going to be a lot higher. And so, I was just piling into these, these call options, and I bought the call options that expire the end of next week. So, I had all the time I've got till the end of next week for this thing to do something. And you can see it did something very quickly. So now, if we look at Lyft, it's got this 4-day coil, where I said yesterday it has these 3 inside day bars. Well, today was a 4th. So the more it kind of coils in this range, the more when it comes out of here, it's going to explode with energy. And we can surmise where the energy is going to go because of the underlying trend and chart pattern. So we saw that this is part of a huge double bottom, right? We're bottomed here, bottomed there. And so you have this huge double bottom. Now you're in an uptrend. And so now you have this coil where the last 4 trading sessions are all within the range of this trading session 5 days ago. So you can see we've got this giant storing of energy, this building of energy, this churning, where the sellers have tried to push this thing down and been unsuccessful each time. In fact, we have a couple of reversals right here. Made a new low, close on the high, and then you did that today. So guess where this is pointing? Sometimes the market points in the direction that it wants to go. So Tarada says, what does Lyft stand for? It stands for nothing. It's just the name of the company. It's the rideshare company. It's the second cousin to Uber. And as I spoke yesterday, this is where I started really unloading into the stock, getting involved right here, where I saw this mini double bottom, and then here was my insurance day bar right here, that mini little inside day bar. Looks like nothing, but it's that storing of energy, and where the energy explodes, one way or another is going to tell you in which direction it's going to go. So I was surmising that we have a double bottom here, we have a huge uptrend, we have a double bottom here, and that if I put a buy stop above here, that the market's going to put me in the direction of the trend. So I was just buying the stock and then buying the options. I bought the $46 calls, I bought the $47 calls, and by the end of the week it closed at $51, $53 or something. I know I made $7 on these calls for every dollar I paid for it, and I made $6 on this one for every $2 I paid for that. So and I'm long the calls now, and I bought more calls in the sell-off today. So when I saw the sell-off today, you kind of have to visualize. I do a lot of visualization, and I play a lot of play around with these charts and just say, does it look reasonable? Does this look like a top? Does this look like it's reasonable that when it was down here, yeah, you have this thing here, but look, I think this is the commanding direction, and I just bet on what I think is going on here. And so I think you have just a floor here, and now I think this ceiling is going to come out. Sharon says, do all double bottoms need to have an inside day bar? No, the inside day bar is just icing on the cake. So Karak says, do you use any other indicators? Nope, I just use this. Price and time. All I need to do is know pattern, direction, and trend. So when I open my chart, so every day, I kind of have, about 20, 30 instruments to look at. I go through all of my 30 charts here. These are all the FX pairs. You've got some gold and silver, you got oil, you got some stock indexes. So I look at those charts, I look at, stock charts, and I know what I'm, and I go through them very quickly because I know what I'm looking for. I go, Australian, Canadian, I think this thing's going higher. It's kind of consolidating at the top. I'm not going to really do anything. It's a little in a resistance zone, but I do think this is going to go higher. I like the Australian dollar higher, but it's, just kind of consolidating up here. And then, look at these yen pairs, which I'll talk about in a moment. So, pound yen, I've been long. We had a bit of a key reversal here. I'm a little bit afraid of these yen pairs, so I might start bailing out of my pound yen, although this does not look like a key reversal that will send the market lower. So, again, I just look for price action. I look for something that I can recognize, that I can just glom onto and understand. And so, we talked about some other charts yesterday, like I'm short Beyond Meat. I got caught, in this whole short squeeze. So right now it's kind of difficult to short stuff because you can be, caught in one of these, big short squeezes because of what's going on with GameStop and the whole thing. But I still believe this company's a piece of garbage, and the stock will eventually, come back down to some kind of reasonable level. So this is the kind of the weekly chart of BYND, and I pointed out that I saw like a head and shoulders here, and then I thought I saw another head and shoulders here. And this is where you can see where patterns get busted. So patterns don't do what you think they're going to do. So right here, if this was a good head and shoulders, we should have seen a crack below this neckline, but instead we saw this bar. And so when you see something opposite of what you think, then sometimes that's just an invitation to do the exact opposite. But I was stubborn. I was short at 140 at this stock, and I stayed short, and I got caught in this. Full disclosure, I told everyone, as I was going into surgery, this is the day that it went and made new highs. So, I'm kind of glad I didn't see it. I don't know if I, would have gotten out of my position or whatnot, but now it's got this coil. You can see it. You can apply the same thing where you can see these 3 weekly bars are just kind of coiling. They're creating some kind of coil, and how this thing breaks out of this coil, one way or another, is going to create a lot of energy. And I'm surmising that it's going to go lower. You can also see that this week is a key reversal, where earlier in the week it made a new high, and now we're on the low. Now we've got 2 days of trading left, so the week is not over. So this bar, we'll kind of take a look at and see what it looks like by the end of the week. So now this is the more kind of short term of what's going on in BYND, Beyond Meat. I think the company announces earnings on February 25th, which is, I think, sometime next week. Usually, again, earnings will be a catalyst to send these things where they want to go. And so to my mind, when you have a key reversal of this size, made a new high, closed on the low, those reversals usually indicate the direction this thing's going to take. And so now this kind of has a funky looking double top. It doesn't, these tops don't have to be, in, the same. But when you look back, I'm pretty confident you're going to see this as a M top or double top, and that this indicates the future trajectory of this thing is lower. So I'm short the stock of BYND, and I'm long the puts. So I've got a heavy bet that this is going to go lower. So George says, does one need a lot of money to invest initially? Absolutely not. If you do the right things consistently and have the right money management, George, you can start with $500. You can start with $1,000. That's the good thing about the FX. They let you, trade mini lots or micro lots, but no, it does not require. So Junkie Trader says, how would you enter a trade like BYND? So yesterday I saw this key reversal, and I'm betting on the long term. I think that, whenever and we don't have the benefit of this, but this has kind of created a shelf where this has hit this area so many times, this 113 area. I mean, many, many times. And it's always my feeling that when you hit something so many times, that thing's going to come out. I think this thing's going to $50 personally. So, based on what I'm seeing, based on the price behavior where I saw this, huge key reversal here, and then this key reversal yesterday, when it started to reverse yesterday, so you can see yesterday, and this is kind of a bet where, I was a little early where it opened much higher. You can see it closed the earlier day there. So it opened, whatever, $5, $6 higher. And when I started seeing it failing, I was already short the stock. I've been short the stock, quite honestly, since here. And I was obstinate, and I got caught in this. But you can see it's almost back to a break even on the stock for me. And I bought the put option, so I'm basically at a break even right now on that bet. But my bet's that this thing's going a lot lower, and so I think my stock will eventually pay me dividends plus. So I started actually shorting the stock when it started failing yesterday, buying puts, and so that was a little bit early. But if you didn't do that, that was a gamble. But after yesterday, it wasn't a gamble. So I was saying this on yesterday's presentation. You had the benefit of seeing this key reversal yesterday, where it made a new high, close on the low. And with these key reversals, it tells you where the risk is. So that if you shorted today, if you shorted it, you can see it just popped about break even. It opened it unchanged. If you shorted it, this was your risk. And I'm, pretty confident that you weren't going to see that high at least today. So, even if, it went up and it closed here, maybe you lost a little bit, but, I didn't see it kind of going through here. So sometimes these reversals, they give you the benefit of hanging out and, seeing how something's going to play out. And, even if you're wrong, you're not going to get, hammered. And so, I was obstinate here. I could see this, this should have broken right here. And when it didn't, I should have said, I usually say when something doesn't do what I think it's going to do the opposite thing. But I'm just so, and this is where my objectivity got really kind of in my way, where I just think the long term of this thing looks so bad that, I was willing to just stick it out no matter what. So Crack says, you talked about management. Did you not put a stop loss on BYND? I did not. And, fortunately I had enough in my account that, I could withstand this, and now, it's come back in my favor. So, sometimes I do things personally on some level where, it's just because of the way I see things, and I'm willing to take certain risks. So, that's just my own personal things. And quite frankly, sometimes I don't put stop losses on certain trades just because I don't want to be taken out arbitrarily. And these are only on trades that I feel so strongly about. But I don't want to advocate that as an example that you should do. I talked about this stock, Snowflake, SNOW. And you can see that it came. So now this is going to be an interesting thing tomorrow. As you can see, we had a bit of a narrow range day. So I have been looking at this thing and feeling very strongly that this looks like a double top. But some of these, things like Lemonade, where you'll see a double top, they'll still have one more rally before they crap out again. So, it's just been a different environment. And then within looking at that, so the whole thing really, this thing just went public, and basically it's traded above or below exactly where we are now. So you can't really make a determination about trend or whatever, but to my mind, patterns are patterns. And this to me looks like a double top. And so I actually shorted it today. This is kind of like so you can see it had a key reversal yesterday, made a new high, closed on the low. And so when it opened, I shorted it. I made a few bucks and got out just because I'm just really antsy. So this is now a bit of a narrow range bar, and so if this starts, popping above here, I would actually even sneak in a buy stop, somewhere above here, 295 or something like that. Just because, I think this is in an area where you could get some support. So this is a very tricky one. I've been buying large, selling this based on what I think is, these key reversals, the double top. But frankly, right in here, I'm not sure what I would do. So I would kind of just leave this alone. But frankly, if this popped above here, I would put a buy stop somewhere above here. And once again, I do a lot of visualization. I start drawing, like if I think it's going to go higher, I kind of say, well, if it does go higher, do I then, if I get, stopped into this thing, do I think that it could do this on me? And then I kind of look at it and, see if that, is theoretically possible. And it is. I mean, it did that right there. But I don't know. I still think that this looks very heavy. Well, you got the double top there. You have another double top here. And so, logically, you could put a sell stop underneath this. And if it runs into you, it's probably going to keep going lower. Now, the other one that was on my radar was, and I spoke to you about this last night, was Lemonade. And, I'm just chipping away at these things. I'm day trading just because they come back in your face so quickly. BYND I'm holding, and Lyft I'm holding, and KTOS I'm holding. But you can see you had this double top and then this key reversal. So, when this thing kind of looked like it was weak on the opening, I shorted it and made about $4 or $5. This thing was down about $9 at one point. And, this is probably not good stuff just to, use, as an example, but you can see that we're sitting on this neckline. And if we were to start coming back to this neckline, which I'm not sure what that price must be, about 140 or something, this then would look like a huge, gigantic, top formation, and then I would look for it to go that way. So Sandra, I've got hundreds of people asking me questions. So if you have a previous question and I didn't answer it, I'm not really looking at the questions right now. I'll circle back and look at some questions. I'm just trying to, taking you through some of my process and, what I did today. And, let's see what else is going on. So those are my heavy bets. I'm long LYFT, I'm long KTOS, and I'm short BYND. And, I've also got the pound New Zealand and also a bit of the pound yen. So I wanted to talk a little bit about these yen trades. And, if you guys are, on my master pattern sessions or in my elite, then it may be a little redundant, but I've made a ton of money shorting the dollar versus the yen. And these yen trades, well, you know what? I'm actually going to go the monthly because this is hitting a particular level that is kind of getting to where I thought it would go. And now it's starting to get interesting where you can see on the monthly, it looks like hardly anything's happened. And the cadence, still looks like it's, going higher. You had this key reversal here, right at this double bottom, which indicated that the trajectory was higher. And so now the question is, is this going to change directions or go back in the direction of its primary downtrend? You can see that this thing's been kind of in a symmetrical triangle, and that the resistance comes pretty close to where we almost are. So I thought we still had a shot to get to about 130. And we still may. We had a huge reversal today, but it may not be consequential. And so hopefully you can understand, if you look at a longer time frame, you can see how it slows everything down. Or if I start looking at a weekly, and certainly today's day, today was very volatile. It looked like this today. And then on a 15-minute chart, I'm sure it looked like a carnival ride. But you see on the longer time frames, you can kind of start to understand what's going on, and it doesn't look so frenetic, and you can calm your mind down and make a more informed decision. And so, I'm looking for this thing to come to this resistance, and then that's going to be an inflection point. Well, either we're going to turn this long downturn trend down, or we're going to kick back in the direction of the primary downtrend. And I do think it's going to be that. Because the long-term trend actually has been lower. I mean, we're still much lower than where we were in 2008. This was 165 and we're now 127. So this is still a downtrend. But, the question is this kind of turning around? Is this a double bottom? Is this kind of getting something where you're going to get kind of a paradigm shift out of here? And I've been openly questioning that and kind of on the fence. And, ultimately you defer the market to, tell you what's going on. But, I kind of look within the complex of this whole downtrend, and I try and, so to my mind, I don't know if these are good colors. You see that Head and Shoulders there, and then you see a double top here. And so, what I try and do is I try and say, what is the governing price pattern? So this, double bottom has been the governing price action for the last several months, and you can take that trade. It's a counter trend trade. It's counter to the dominant downtrend. And the market goes up and the market goes down and, puts on a pattern and then indicates. But the question is, where is it going to go from here? And, like I said, it's an open question whether we're at an inflection point where this thing's going to start turning around, or it's going to kick back into its trend, dominant trend. And I still think it's the latter, because we're still in a downtrend, and I still think that these are the dominant price patterns. Let me just change colors here. So I don't know if that's clear to you guys. So, so that Head and Shoulders and that double top, tells me that this is, kind of still, commanding the show. And that, yes, you can levitate up here, but eventually this, will kick back into the trend. But, maybe not. And so I'm trying to make up my mind, is this the double bottom that's, gonna, levitate this whole thing, or are these patterns? And, and again, I just use a certain logic that you're not gonna, find in textbooks, and start saying, have an open conversation with myself. And I say, look, if this was a double bottom, and if this were a bottom, then really what you should see is this. You should see a pattern of higher highs and higher lows after you see a bottom. But instead, what you have here is, lower highs and lower lows. Now, it's not to say that, these markets can't have huge rallies, but to me, these huge rallies are counter trend rallies to the main direction. And so we may not have, exhausted this yet. We might still have some gas left to go to that 130 inflection point or not. And so I start peeling back from the monthly and start looking at the weekly. And so you can see now we're starting to get a bit of a reversal going, a key reversal. And I got to wait till Friday. So I always wait to see the close of the bar. And if you have a weekly bar, because this is a weekly chart, then we have to wait till, the close of the week to see what this looks like. So, if at the end of the week, we're sitting down here, and it's a huge key reversal. So you went higher in the week, and then by the end of the week you close lower, then that would be one thing. But if by the end of the week, we're somewhere here, then it'll have a completely different connotation for me. So right now this is, just movement at, broke out, and now, it's kind of coming back and retracing to that breakout area. But, I'm always on the kind of lookout when this rally is going to end and start going that way. And we could be maybe getting close to that. So you can see this is the double top that I was talking about on that monthly chart. And that to me is kind of the dominant pattern. So now we've kind of, threatened the threshold. So very often, prices will rise back to where they broke out from. And, this could be, a formidable opportunity where this starts reversing. And I don't know yet. And the only way to know is just let the market do its thing and give you more information. So when you don't know, just hang back and let the market. So you can see as we dial from one time frame to the other, it looks more and more volatile. And then, our emotions get more and more volatile. And then, our consternation gets more and more volatile. So this is the daily chart, and now you can see, a very pronounced key reversal on the daily. And, I don't expect the market just to cut through all of this. So even if I think it's a short, I don't think that it's just going to do that. So I'm looking for, to see what this thing does here, how it plays, in the next session. And the more information, if we kind of, get an inside bar here, then I can put my sell stop under the low. I mean, I would still try putting a sell stop under here and see, seeing how it goes. And so you could put a sell stop here, and then this would be your risk. So whatever that is, 150 pips. And then, I would look at that as your reward. If this is going to go to what I think it's going to go, or not, but the thing is, if it starts grabbing a foothold, like, tomorrow it starts just either just doing this, and then it, kind of, and then, it keeps going up, or, we get something where, it goes down and then comes back up. And so, I just play around with different visuals, but I do feel like this could be a bull trap where you can see the market broke out of this huge resistance. It's been banging up against 127 for, a while. And now you got just above there, everybody got excited, everybody bought the breakout, and now that could be a trap. So I do think if you're aggressive, you could start poking around at the short side of this euro yen trade. So Graham says, fantastic session. Thanks, Mark. I've watched about a dozen of these, and this has been the best. So Graham, that is fantastic. Look, when I got in this business, quite honestly, when I started the pattern trade, I had no clue, what I was going to do, how I was going to do it, how it was going to be received. I've been trading for many decades. All of this stuff just resides in my brain. A lot of it is visceral and instinctive. I just instinctively, I look at things, I look at price action, I look at lift coming off, and I just, it's very instinctive. And so I didn't know if I could, really convey adequately what's in my brain. So when I get feedback like that, I really appreciate it. So Crack, thank you also. So let me just crack on, no pun intended. So, again, I've been looking at these yen pairs very bearishly because they've really been the dominant pattern. So just to put that in perspective, and I know if you've been in, part of my program for any length of time, you've heard me wax on about, dollar yen. I've just made a fortune of money in this chart. So this is the weekly setup or the trading pattern, trading chart of US dollar versus the Japanese yen. And to me, there's just every classic market top that you could find in any textbook or website. So you have the double top here, where you went to a perfect top and created this end top. Now, again, this was all the way back in 2015. So I will trade in a current time frame referencing something, 5 years ago. Because to me, this is the governing price pattern. This has governed and dictated prices for 5 years. So when I see something, and also within this time frame, you have this head and shoulder, which looks like just a man or woman's head and shoulder. So you have the combination, double top, head and shoulders. So this was going to govern or dictate, prices going forward. Now, this doesn't mean that there are all kinds of times where you get all kinds of rallies. But to me, every time it rallied, I shorted it and have made an unfair amount of money just on the observation of that. And then using, all my tricks in the Pattern Trader Handbook, which basically I will make available to you at the end, where it just shows you exactly how I, do my layered approach. And so after that head and shoulders, we've had this long-term sawtooth descending triangle. And you can see that this has just been bouncing, but each bounce, each high has been lower than the previous high. So even if we come here, it's still, it'll look like something, but it's just a bounce within a sawtooth market that I eventually expect to do that. So, right now, these yen pairs, to my mind, long-term, they're bearish, but, they've caught a bit of a bid. They've caught a bit of support as they caught support here, as they caught support here, as they caught support here. So I expect that these rallies in these yen pairs, will run out of gas, but I'm not going to get in front of it. I just, right now, I'm not going to just sell dollar yen because I think it's going to go down long term. I'm going to wait for my chance. And if it comes up here and then gives me, my key reversal inside bar, and then I, get this, then away we go. On the other hand, if, it starts breaking out, I don't know what that is. If it starts breaking out and not doing, sorry, I keep not doing what I expect, at some point, I'll revisit my assumptions. If it starts doing that and starts breaking out, then, I'm not going to get obstinate. But, also one of my philosophies, just like Beyond Meat, when you hit a certain level so many times, 1, 2, 3, 4, 5, 6, 7, 90, 100. So when you hit this level, 103, 104, so many times, it's just my instinct, my philosophy that if you have a bottom, you're not going to give somebody umpteen times to buy something. So you might have a double bottom, you might have a triple bottom, but eventually, if it's a bottom, it's going to go. It doesn't give you 5 years and 19 opportunities. So I don't think that this is a sustainable, kind of thing. But you could always get something like Beyond Meat, where you get some kind of short covering things, people chase it, and then it comes back down. So, anything's possible. So I will wait for this thing in due course. I'm not short now. I'm not doing anything. But, if we get up here and then we, kind of give one of these, I'm going to be looking for, this thing to go in the direction of the dominant trend. And that's why I'm looking at the euro yen as a potential, thing where it may be turning right now. And we'll see. I mean, it's going to be very interesting to see how we close for the week. And so I don't think there's any rush to get in this thing. You can just wait for the weekly close. Pound yen is still pretty aggressive. So when you look at pound yen on the weekly, it still looks like a buy. It really hasn't turned around. So, my instinct could be completely wrong, where you could be starting a huge paradigm shift, where this thing is, going to go that way, because you've just had this steady accumulation, and right now you're just at a resistance zone. So there's a heavy resistance zone right in here, you know. So, you know, today it just buckled because this is a natural point for, you know, the market just to consolidate. So it's going to be very interesting to see what happens here. But I think one way or another, we're at an inflection point on these yen pairs, that there's going to be a lot of money to be made. And hopefully, you know, the elite members and myself will jump on it in due time. George, your worry. So Sheila says your inputs are very clear. Your vision is clear. So thank you for that, Sheila. So I'll kind of leave it there and maybe get to some of your questions. TV, I don't look at the, is that the RAND? I don't look at, you know, the non-liquid pairs. So, you know, I'm not looking at the pair you're, Brent says, what trading app or services do you recommend? So if you have Charles Schwab, they're fine. Anybody who's regulated, Brent, is fine. Eric wants to know about Plug. I assume that's Plug Power. Yeah, I made a ton of money on this stock. It looks like it's, you know, formed a, you know, a short-term resistance here. You can see the double top all the way back here. So, you know, if you didn't make your money on this now, so you can see it's, you know, when something goes hyperbolic and the volatility starts expanding, you know, that's when I get out. So, you know, I don't know where this is going to go, but when you get something that went from $2 to 75 bucks, you know, once it starts getting into this phase, and, you know, I think that's what I said with gold yesterday. Once you start to see the volatility pick up like that, I always exit, right? So you can see this was a slow build. You know, it's kind of like I'm a body surfer, right? And you see most body surfers, they try and catch the wave when the wave is right here, crashing over the head, and then they try and catch it. Meantime, it just drives them right into the ground. Whereas, you know, if you're, you know, you just wait, you know, and you just wait, you see the water, it's calm, and then you start seeing that it just slowly starts to build. By the time I'm seeing it slowly start to build, I'm already swimming in the, you know, in the direction. So I'm just waiting for this thing, and then it just, you know, as it builds, now it just sends me, you know, into the beach. But you could see it was calm, 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 and then the volatility picked up, and that's kind of how I look at the markets. Is that once, you know, it's calm, 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 and then you get this, I just get out. You know, if I've made a lot of money, I'll just hand it over to the next guy, and if it gets, you know, if it makes more, then so be it. You can also see right here, let me just make some room. You have this double top right here and these key reversals. So sometimes, you know, you wonder if the pattern shaping, and then I look for reference with the price. And you can see it made a new high, close on the low. Made a new high, close on the low. And so those two in the same area, that double top, combined with the volatility, said, you know, get out. So, you know, any kind of move higher, I would look for it to. So TV wants to know about Tesla. You know, Tesla also looks like it's getting heavy to me. But actually it's contained pretty well. I mean, you cannot fight this bull thing. And you see the key reversal today. You could probably take that. So sometimes it's just a function of, you know, trend and price action. So the trend obviously in Tesla is aggressively higher. This is in an uptrend. And so you kind of have this key reversal here. I mean, you do have a series of tops. It is looking like, well, you know, what something looks like and what something is, you know, is only informed by the market. So you do have this top, and so this is a top. So if this is a top, then the market should do what, so if this is the double top, then we should see the market do this. But if the market starts, going up, then it's what we call a busted pattern, where the implications of that pattern do not hold. So to me, this looks like KTOS, where there was a double top in KTOS at 30, and then it came back down to 26, but I just looked at that as an opportunity, to buy it. And this is probably the same thing where you had this key reversal today, and it looks like it's pointing in the direction of the underlying trend. So yeah, I think this is probably going to go higher here. Mustafa wants to know about the NASDAQ itself. So the proxy for the NASDAQ is the QQQ ETF. And you can see that we sold off and we had this, key reversal here. So kind of tough to tell what's going on here. This is just a well-defined, up market. I showed it on another chart yesterday. You can see we hit the upper bounds of this thing. I wouldn't be surprised if we tested here. I would just look at that as a buying opportunity, but you can see we had a key reversal today. Made a new low, closed on the high. Now, this, I don't know. We'll see, how this thing, but, it looks like it's going to follow through to the upside, but we'll see. So kind of an upside down indicator that I always keep an eye on, that I play around with, is a volatility. So you can see the way this volatility chart closed. It closed really badly, which indicates that the market's likely to go higher. So this is just an inverted relationship. This is a volatility chart. Volatility means that, when the stock market starts going down, the volatility increases, and then this will increase. So this is basically an inverse indicator. So, whenever I kind of look for different ways of corroborating what I'm looking at, different instruments, different things to look at. And you can see that this is just in a, huge downtrend consistent with the uptrend. And today was a huge key reversal. Made a new high because the market went lower, but then closed, on the low. And so, I'm saying to myself, and then I draw, all these things. I'm saying to myself, is it legitimate that, we'll see this? So sometimes when we see these two lows in the same area, I mean, they can be a double bottom, and if this started, doing this tomorrow, I would start looking at that as a bottom. But, the way this thing closed, it's looking like, it's going to go lower. So this closed really bad, which implies that it's going to go lower, which implies that the market's going to go higher. Rob says, can you tell us about the dollar Canadian? Where is this thing here? So this is the weekly chart of the dollar Canadian. And I do think the dollar is in a long-term downtrend, but it's got a bit of support here. So you can see that I think that dollar Canadian put on this huge double top right here. It's also got kind of a head and shoulders in this time frame. But very often, you can retest the breakout. So I wouldn't be, surprised if we kind of, retested this breakout area around 130, and then I would kind of expect it to turn back in the direction, because you've got a bit of support here. It's minor. Again, this is in a primary downtrend. So, right now you've got a bit of support. You've got this little double bottom, and then at the bottom, you also have, you made a new low, close on the high. You made a low, and again, this is a weekly bar, so we'll have to wait till Friday close to see what, and again, this whole thing changes, if we, close right on the low, and it looks like that, it's going to have a whole different characteristic than if it closes on the high. So I do think that we're at a little bit of a support area, but long term, I do expect this thing to go lower. Michael says, what time frames do you look at? So you can see that I've toggled from the monthly to the weekly to the daily. And people say, well, why can't you do this on a 1 hour or 4 hour chart? Because it really comes down to my objective, and you really have to ask yourself, what is your objective in trading? So if your objective in trading, is to sit in front of a screen and duke it out and try and get 30 pips, in this bar, 5 times a day, then, good luck to you. That's not really what I'm trying to do. I'm trying to see patterns that leads to, huge moves. And this was a pattern that I talked about, the double top, the descending wedge, and started shorting this thing when it broke out here. So I'm looking for huge moves in these markets. Now, you don't always get them, but that's kind of my objective. And in order to see this kind of move, you can't see, this kind of setup on a 15-minute chart. You can't see that it made a top on a 4-hour chart. So in order to understand the cards you're holding, to understand which way to be faced, so ultimately you need to know which way to be faced, in what you're trading. And sometimes there are counter trend patterns where it's justified to take a bit of a trip that way if there's a pattern that indicates that. But to my mind, the bigger pattern tells you that this is going to go down, and that if this retraced to 130, I'd look at that as an opportunity. So it really depends what I'm looking to take 250 pips out of the market, 350 pips, 500 pips. I've taken thousands of pips out of the markets, sitting in trades for 3 months, or 3 weeks, or 3 days. So it really depends what you want to do. But I want to make big money, and I'm willing to sit in positions for a while. Graham wants to know about pound versus US dollar. So you can see we've got a mini retracement at a very legitimate resistance level. So I do think that the dollar is going to weaken, which means the pound versus the dollar is going to go higher long term, because of we have what's called an Eve and Adam double bottom. This is called an Eve because it has multiple attempts at one low, and that has a single attempt. But whatever you call it, it's a double bottom. And you can see that we had like this huge resistance area about 135. I wouldn't be surprised to see the pound retest this area. You can see that this is a meaningful resistance level right here. And so, this has been just an uninterrupted, uptrend. And, I wouldn't be surprised to see a pullback to the uptrend line and the breakout area. But, right now, this is just in a slow and steady uptrend, and, looks very favorable long term. Yeah, you can see this is just in a controlled uptrend. So I would look to buy the dips in this thing. Mustafa says, I'm currently long on silver. Is this a good trade? I'm short on gold, and silver is a different animal. It's exhibiting much more strength than gold. The question is, will it relent? Or I just feel long term this is a bullish chart. So the more it kind of hangs out here, the more it's. So again, I try and say to myself, what are the governing patterns? What are the patterns that are going to govern the future trajectory of this? And I think it all starts with this inverted head and shoulders, which again is just like an upside down version of a man's left shoulder. This would be the head, that'd be the right shoulder, and this was the neckline. And, right here, I was advising our members to, get long with a vengeance, and I made almost 7 figures, in this explosion. And to me, this is what, Kratos looks like. So if you look at this chart, KTOS looks just like this before it broke out. That's why I'm so excited about seeing that KTOS chart. And then you have another bottom here. So you have these bottoms that are controlling this price action. And now, you just have this coil and this building of energy. And the more this builds, the more it kind of will create the energy for the next explosion, which seems higher. Now, look, I mean, playing devil's advocate, you could say, well, this looks like a double top, and it is. But the thing is, if it is, then we should see, price action that way. And instead, the price is just being contained. So for now, it just looks like the calm before the storm, before, this thing levitates again. So I do think that it could keep consolidating this level, but the more it kind of, it just holds here and doesn't break it, the more, healthy that will be for a future. And then I try and do things and I say, okay, can I see it going up? So you can see that if it has to go up, it has to, fight this price bar here. And so, whenever you had, something like this, you need to kind of build space so you can kind of, go against it. So this is, I think, just locked up in here, but I do think you can see here's a series of key reversals, made a new low, closed on the high. And I think these guys are kind of indicating where the risk is. I wouldn't expect the risk to get below here. And so if you're long-term bullish on silver, but you don't want, all the ups and downs or the leverage, there's an ETF, SLV, that trades for about 25 bucks. That you can stick it in your portfolio if you want silver, but you just don't want to kind of watch it. Jamie, I don't look at volume. You can see this is all I look at. I just look at this picture of price and time. We call this a naked chart because there are no indicators. There's no volume. There's no moving averages. There's no Bollinger Bands. There's nothing. I just look at a picture and then I look at the bars and the price action and, try and assemble a risk reward based on that setup. And, it works out very well. It just, simple, is the best. Steve Jobs, when he took over the reins of, Apple, they were in like thousands of businesses, printing and faxing and all this stuff. And he made a chart, on an axis, and he says, we're just going to be in business and consumer, and he had like just three or four ideas, and they got rid of like hundreds of businesses, and he just simplified everything. His designs were simple, and so to me, I feel like I should be able to explain my trading to a 6-year-old. I don't need complex indicators. I don't need, I can just look at this picture and understand what's going on. This is a downtrend. I can see all the price reversals in the downtrend, and I can see what's going on here. Conversely, I can see what's going on with lift, where I can see the double bottom and the coil and the key reversal, and this is the only picture I need. And I'll bet a lot of money on this picture. Price is going up, key reversals here, are basically underpinning my risk. So if you were to buy it, today on a new high at, what was the high today? 58.26. You buy it tomorrow in a buy stop at 58.35. Put your stop loss on today's low, which was 55.76. And I don't think you'll see today's low. I think that your risk is basically underpinned by everybody who chased the lows today. So Faye wants to know about the Swiss franc. The Swiss franc is weakening. I like it against the British pound. I think that there's a real good trade here. And this has also been a trap play. You know, a bear trap was sprung where, you know, you had all of the support here. And in the height of the pandemic, you had, you know, these traders chasing these new lows. And now they're, you know, they're trapped. And so when you have a bear trap and it's, you know, sprung, it, you know, goes into a short squeeze. And I think this is exactly what's happening here. And, you know, I love this chart. So I think that there's a, you know, a very good chance that you could get, you know, some huge activity in here. So I think the Swiss franc is weakening. So Mustafa says, absolutely feel more confident after every session. So thanks, Mustafa. What's your win-lose ratio? Michael says, I don't know. You know, lately I've been hitting on all cylinders. I've made a ton of money in the last month or so. But, you know, I don't know if it was last year or the year before, I wasn't more than 50% correct. And yet I made like 11,000 pips. So the win-loss really, you know, to me, the more I lose, the more confident I get because I know I'm getting closer to a winning trade. So sometimes the markets are just, you know, bollocks and, you know, they go back and forth and, you know, you make some mistakes and, you know, I just know that the more time that goes on, the more that the market will sort itself out. I'll see a pattern and then I'll just go to town on that. And that's actually what happened to me. So, yeah, about 2 months ago, that's exactly what happened. I went into like a 15 or 20% drawdown. And then I just couldn't do anything right. I was buying IBM, I was buying Lyft. I bought Lyft right before it, you know, right at the resistance level, you know, and then, you know, kept getting out and taking small losses. And I went down about 15 or 20%. And then I locked and loaded on Lyft and KTOS and went up, I don't know, 150% from there. So, I mean, I was taking more risk on the things that I liked, but they were still within the confines of, you know, my net worth and well within, you know, so if I lost that 100 grand in options, you know, it's not nice to lose 100 grand, but I really wouldn't care because I know that I make a lot more on these other trades. So it's not really about win loss. I just, you know, one trade last year in silver. Really, I could have lost all year. I could have lost 99 trades and just done that one trade and I would have been a big winner. So it's really about being patient and disciplined. And the thing is, you know, if you're trading every day, if you're like trading 5 times a day in and out of something, you start losing the forest for the trees. So most people just, you know, have some kind of expert advisor or some kind of 15-minute pattern where, you know, they're looking to extract, you know, 30 pips or 15 pips out of, you know, a bar like this, you know, 5 times a day. Instead of looking at, you know, the setup and saying, okay, I want to be positioned for when it moves in one direction or another. And I can take 150 pips out or 350 pips. I know I've gotten so many comments, you know, from people who said, you know, Mark, before I met you, I never made 100 pips on a trade because most systems, you know, are you know, modified on or bent on you know, just looking at a 15-minute chart. You know, I'm just going to pick one, and then, you know, putting some Bollinger Band or moving average. And, you know, now you're trading in and out of this a couple times a day. So, you know, here's a head and shoulders, and, you know, it actually does look like a head and shoulders. And so, but, you know, 4 minutes later, it could be, you know, 80 pips higher. And, you know, you don't know why. So I'm just looking for bigger moves in the markets. You can see, like pound New Zealand has just been a heart attack here, and it's kind of looking like a double top head and shoulders here on the 15-minute. Maybe I should heed that. You can see we had a reversal, in the last session, but I don't trade all reversals in a vacuum, right? So to me, I wouldn't just go short on this reversal, although I would certainly pay attention to it, depending on the price action. But you can see immediately into the next session, we're going higher. So, if the next session, we do this and we stabilize, to my mind, this is what, for now is driving this. If this were to start, cracking through this neckline and coming under here, then I would say this is probably fizzling out. So for right now, I just think that New Zealand dollar's in this slow turnaround, pound New Zealand dollar. And yes, you have this key reversal, but you can't just trade reversals in a vacuum. I have to say to myself, can I see prices just crashing through here like this? And I can't really draw that picture in my mind. I just think that you're in this kind of controlled uptrend right now. And yes, you kind of crashed in the last session. And if you're looking at that double top head and shoulders on that 15-minute chart, you may be encouraged to go short. And maybe that's the right thing to do, but I don't think so. So, we'll kind of see how this plays out. This is, in a thing where there is clearly resistance, and I don't like to, see reversals if I'm, trying to play something one way. But not all reversals are created equal. You had a reversal here, made a new high close on the low. You had a reversal there. And yeah, they led to these, kind of mini things, but ultimately, this is, going higher because I feel that, this is the pattern that's driving it. And it's just, consolidating here. It's just, so it's going to be very interesting to see how we, hold here. If we hold, do this, then, you can feel very comfortable, adding to a position, I would think. So it's going to be interesting to see how this thing plays out. Like I said, I think this is the risk under yesterday's key reversal. And if it comes through here and starts fizzling out, then it's going to go back in the direction of the trend. And then, and then I'll just get out and look at something else. And that's the way it goes. Not looking to, make $1 million on each trade. Shabu says, how often would you check your charts? So really, the best thing is to, if you got to the habit, and I know this sounds crazy, and it's very difficult to do, of, just checking your chart once a day, you would make a ton of money. You would make a ton of money, because think about how many times you got emotional when you saw something happen during the day. Like, I wasn't happy today when I saw Lyft careening down. I had, big option positions. I got a big stock position, and, it's not fun. And, it's like you think, at some point the NASDAQ's going to crap out. It's been going up for a long time, and maybe this is the peak. And so, when your stock is there, it's hard not to think, oh, I need to do something. I need to kind of maybe get, some of my option position off, maybe reduce my stock holdings, and, make an emotional decision. And that's why I look at a daily chart, because I want to see how it closes relative to the low and high. So yes, we were down here at some point today, but now we ended there. So it changes the entire picture. So now if you put your buy stop tomorrow there at 58.35, and you put your stop loss here at whatever it is, 55, whatever today's lows was, and that's your risk, and now you leave it. Now you set up your order. Go to your platform, put a buy stop at 58.35, a sell stop at 58, whatever the low was. The low was 55.76. And then don't look at it. Don't look at it. Look at it at 4 o'clock tomorrow when it closes, and you'll make a lot of money that way. Right? So if you know and understand why you're in a trade, then you shouldn't have to be on spilkas, right? You shouldn't have to worry about it all the time. So that's what I would do. All right, so I'm going to leave you with this thought. If you want to, really understand my setups, my insurance day bars, and everything, then we have a very easy way for you to really understand it. I put together a book together with my targeted trading methodology. What an inside day bar is, what a key reversal is, what the patterns are, and what the layered strategy is. And it's all in this book, and it's available for any price you want to pay. You can pay $1, $10, $100. And here's the thing. This is my commitment, and this is what I do for, when I sell my books, is that whatever you decide to pay, I double that amount and donate it to a charity, the American Childhood Cancer Organization. And so, this is my way of kind of giving back. I donate a ton of money. I donated over $20,000 last year based on, our book sales. So this is a great way for you to kind of get all the information that I've been talking about. And again, it's to pay what you want. So it's kind of a no-brainer. I'm going to put that in the webinar thing, as well as the chat box. And so it's in the chat box and on your webinar platform. So that's kind of a great way to, understand a little bit more about what I've been saying, how I get into Lift, and how I look at setups and how I kind of structure a risk reward. That's what it all comes down to. Setting up something where you understand the risk and reward instead of chasing something based on a 15-minute, emotional movement. And that's what we're really doing. If you're staring at the screens, that's what you're doing. You're really kind of, doing things more emotionally. And if you're trading on a 15-minute time chart and you're looking for steals of 7 pips here and 12 pips there, the broker is going to end up with all your money. So, I look for the bigger moves. I got involved in Lift, as did my elite members, at $46. And right now it's at $58, 2 weeks later. So that's really what I'm looking for in my trades. And I don't need many of those, a year. So we're trying to keep active. We're trying to, so sometimes, we're just doing the stuff for a bump or a rush or the action. But if you really want to make money, it's kind of understanding the setups and taking advantage of them when they occur. And if I just get a half a dozen great trades a year, they make my, they'll make my year. I mean, this KTOS trade, if it takes off, I've still got a month to hang out in it. The earnings come out on the 22nd. I don't know. I could make my year in that stock. We'll see what happens. All right, guys, I will see you back at 4 p.m. Eastern Standard Time tomorrow. Thanks a ton. Please, leave me your comments. I'll also put my review website if you would like to. I would really appreciate it. Good, bad, or indifferent. We put them all up. So that's in the chat box. So Victor says, thank you. I got a lot smarter again. The problem is that I can only open 2 trades with my small balance. So Victor, that's the most trades you should have. I don't usually have more than 2 trades on. I have, 3 trades today. I have KTOS, Lift, and BYND. So it's not about the number of trades. In fact, the more selective you are and you hang out, it's the quality of your trades, not the quantity. So that's really the takeaway here. It's the quality of the trades. So, you know, I got in at Lyft at 46 and I just stay in that one trade. And, you know, in 2 months, it's at 80. I don't need too many other trades. All right, guys, take care. We'll see you tomorrow.